I'm going to discuss a particular difficult question on consignment. Here is the question. Son of Siliguri consigned goods costing rupees 90,000 to Moon of Mumbai. From the first line, I got some idea. Number one, who is the consignor? The person who is sending goods is called consignor. That is, son of Siliguri is the consignor here. And naturally the consignee here is Moon of Mumbai, because son of Siliguri is consigning goods to Moon of Mumbai. How much? The units are absent. Only the amount of the goods is given. Therefore, it is becoming more complicated. The invoice price was made so as to show a profit of 33 and 1/3%. 33 and 1/3%. Naturally, you can get an idea that is, it is only a problem of invoice price. Because goods are invoiced, goods are sent to the consignee at an invoice price, showing a profit of 33 and 1/3% on cost. Son paid rupees 600 as carriage and rupees 2,400 as freight and insurance. Goods costing rupees 10,000 were destroyed while in transit. Therefore, every information is given here, but in amount. There is no room for units. Only amounts are given. How much goods? A volume of goods costing rupees 90,000 has been sent. At the same time, it is being sent at a profit of 33 and 1/3% on CP. That means cost price. It is an invoice price. Therefore, at first we have to calculate the actual price, that is invoice price of the goods. Now come to the solution for the first line. Two goods sent and consignment here, you can see easily, and it is the IP price, that means invoice price, 90,000 cost price, and 90,000 into 1/3. Now the question is that why should we multiply 90,000 by 1/3? 33 and 1/3% on cost means 100 by 3% on cost. That is 100 by 300 on cost. If we look here, that is 1/3 on cost price. Naturally, we know that invoice price is equal to 100 plus 100 by 3, that is 400 by 3, that is 400 by 300, naturally. $400 by 3. 400 by 3 or 300 plus 400, that is invoice price is 1/4. Mind it, if 1/3 on CP is there, then you have to remember that 1/4 on IP. And if it is, that is cost price, if the cost price is 1 by 4 on CP is equal to 1 by 5 on IP. Mind it very carefully. That is, 1 is the numerator and 4 is the denominator, and you have to add 1 to denominator, therefore we get 1 by 5 on IP. Likewise, 1/3 on CP is equal to 1/4 on IP. Therefore, we have to multiply by 1/3 because 33 and 1/3% on cost is given. Therefore, we have to multiply by 1/3 the CP price, that is 90,000. Therefore, 90,000 plus 90,000 into 1 by 3 is equal to, we get 1,20,000. We got this amount. At the same time, a loading is actually imposed on the goods sent on consignment. Therefore, I have to pass opposite entry, that is by goods sent on consignment account, that is loading. I have to calculate the loading. 1,20,000 is IP. Therefore, 1,20,000 into 1/4 or 90,000 into 1/3, that is 30,000. It is the loading, and therefore we have to charge loading on the opposite side. Generally, loading is charged on goods sent on consignment, number 1. Number 2, goods returned. Number 3, abnormal loss. And number 4, closing stock. There are 4 items on which loading is generally charged. Now come to the next part. Son paid rupees 600 as carriage and rupees 2,400 as freight and insurance. Both of them are non-recurring. Do remember it, please, that all the expenses incurred by consignor is treated as non-recurring. Therefore, I have to take this part in time of calculation of abnormal loss as non-recurring. Now the next part. In Mumbai, goods costing rupees 10,000 were destroyed while in transit. That means abnormal loss is given here. But mind it, the cost price of goods is rupees 10,000. Therefore, I have to charge invoice price. Now, the entry will be abnormal loss account debit to consignment, that is by abnormal loss or goods destroyed in transit. 13,667. This is the abnormal loss. 13,667, this is the abnormal loss. And how to calculate? Then see note number 3. Now come to note number 3. This is note number 3. That is 3A. You may put A here and 3A. Valuation of unsold stock. Here cost of goods lost in transit 10,000 plus loading. That means 10,000 into 1/3. Because 10,000 is the cost, therefore I have to multiply cost by 1/3. And we get 13,333. Now I have to add proportionate non-recurring expenses of consignor. Proportionate non-recurring expenses of consignor. Therefore, I have to calculate valuation of unsold stock. Cost of goods lost in transit is given rupees 10,000, but it is the cost, and I have to charge loading to cost. Therefore, we get 10,000 plus 10,000 into 1 3, that is 13,333. It is at invoice. Now I have to add proportional non-recurring expenses of consignor. I told you earlier that all the expenses of consignor is treated as non-recurring expenses. Therefore, the expenses of consignor was 3,000. Naturally, I have to come here with rupees 3,000. 3,000 into 10,000 divided by 90,000. Now, how did you get 10,000? Because abnormal loss at cost was 10,000 and 90,000 was the cost of goods consigned. Here it is 90,000. Therefore, we got the ratio 1 by 9, that is 10,000 divided by 90,000. Naturally, proportional non-recurring expense of consignor is 3,000 into 10,000 divided by 90,000, that is 334 only. Naturally, total is 13,667, and it is goods, abnormal loss of goods or goods destroyed in transit, that is 13,667. Now come to the question again. Insurance claim admitted the full claim. Therefore, there is no other alternative. There is no case of actual loss because all the amount has been realized from insurance company. Now the next point is in Mumbai, Moon paid rupees 480 as carriage, that is consignee, spent rupees 480 as carriage and 1,200 as go down rent. 1,200 as go down rent, it is a recurring expenses. Mind it. Therefore, to Moon account, that is consignee's expenses, carriage 480 and go down rent 1,200. Naturally, we got this amount 1,680, and it is the expenses incurred by consignee. Therefore, to Moon account, that is consignee's account, 1,680. But remember, go down rent is given and it is recurring expenses, and it will come in time of calculation of closing stock. Next, two-thirds of the goods received by Moon was sold by her at invoice price. At invoice price. Naturally, I have to calculate this actual sale proceeds. Note number 2 is given, and see note number 2 here, consignment sale. Consignee, that is Moon, sold 2/3 of the goods received at IP. Now, how much goods he received? 90,000 was sent and 10,000 was lost in transit. Therefore, he received only goods of rupees 80,000. Naturally, cost of goods sold 2/3 here is given in the question. Therefore, 2/3 into 80,000, that is 53,333. It was the actual cost of goods sold or cost of goods sold. But I have to charge loading because the question was given in this way that 2/3 of the goods was sold by her at invoice price. At invoice price, mind it very carefully, that at invoice price. This item is very important. Therefore, we have to charge loading on it, and it is a cost item. Therefore, I have to add 1/3 of rupees 53,333. This is the loading. Therefore, this is the loading. Therefore, we got, you may calculate on your calculator, 53,333 was given, and if you divide by 3, we get 17778 approx. Therefore, we get 71,111. It is the sale price. Therefore, we have to put this amount here by moon account gross sales or sales process. Now, come to the question again. Moon sent a check to Sun for the sale process after deducting the expenses incurred by her and the commission due to her, ordinary 5% and delta percent 2.5%. Therefore, it is very easy to calculate. To moon account for commission, ordinary commission 5% on rupees 71,111, that is sale process, we get 3,556. Similarly, delta commission. Now, what is delta commission? For taking extra risks, the consignee is given some extra commission by the consignor. Therefore, if there is delta commission in the given consignment process, then there is no sense of bad debts, because there will be no bad debts, and if any bad debt arises, then that amount will be returned by the consignee. Therefore, there will be no bad debt in case of delta commission. Therefore, 2.5% on rupees sale process, that is 71,111, and we get 1778, and naturally you add, then we get 5,334. Up to this part, it is complete. Now, I have to calculate amount of consignment stock. It is the most important part. On the other hand, abnormal loss was 13,667. Here, some loading is there. Therefore, we have to charge loading on the opposite side. And to goods destroyed in transit, loading, 30,000 loading was there, and into 1/9. Now 1/9, that is 10,000 divided by 90,000. That was the loading. And if we see that this is loading, therefore 30,000 into 1/9, that is 3,333. It is loading. Therefore, we have to charge on the debit side. Now, come to the point of closing stock. Here, 30,000 minus 3,333 into 10/90. This is here, and loading on unsold stock. We can calculate it, because cost of goods unsold 90,000 consigned, 10,000 lost, and now I have to calculate amount of consignment stock, naturally valuation of consignment stock as per note number 4. Cost of goods unsold is equal to 35,556. How did you calculate? 90,000 was sent, 10,000 was lost in transit, therefore 80,000. 80,000 into 1 by 3. 1 by 3, why? Because it was 1 by 3 into 400 by 300. 400 by 300. 1 by 3 into 400 by 300. That is 35,556. Now, how did you get it? Because 4 by 3 was there. Only 2/3 was sold out. Therefore, 1/3 was remaining. Therefore, I have to calculate 1/3 on rupees 80,000 actually received. Therefore, 80,000 into 1/3 into 4 by 3, that is 400 by 300. It was 1 by 3. If we see early, that 1/3 on CP, that is 4 by 3, that is 35,556. Now come to add proportional non-recurring expense of consignor, that is 3,000 non-recurring expenses of consignor and 35,556, that is this amount divided by 1,20,000, that is the sent amount, goods sent at invoice price, mind it, at invoice price. And we have to, and how did you get 4 by 3? 1/3 of profit was added, therefore we got 90,000 plus 90,000 into 1 by 3. That is 90,000 into 4 by 3 into 1/3, because 2/3 was sold out. Naturally, remaining part is 1/3. Okay? Therefore, you got this amount here. And proportional non-recurring expenses of consignor, this amount is divided by 1,20,000 because it is at invoice price. You may also calculate 26,676. How did you get? From this part, we got this amount by 90,000. It is better to calculate in this way because it is at invoice price. Therefore, the last point is add proportional non-recurring expense of consignee, that is 480 into 26,676. That amount divided by 80,000. Now, how did you get 80,000? Because 10,000 was lost in transit. Therefore, consignee received goods of rupees 80,000. Therefore, 26,667. Therefore, 480 into 26,667 divided by 80,000, we got 160, and the last one is 36,605. It is the Ansel stock, and you have to put this amount here by consignment stock. Similarly, I told you many times that loading is to be charged on consignment stock. Therefore, the opposite entry will have to be passed to stock reserve account, that is the loading. 26,676, we got this amount from this calculation here, and therefore that amount into 1/3. 1/3 profit is charged and it is the cost price. Therefore, we got the loading 8,889. And ultimately, general profit and loss account was 9,146. This is really a very important question indeed. And you have to calculate this question very carefully. You have to work out this problem very carefully. Otherwise, you can't do. And you are asked to prepare consignment account and at the same time Moon's current account. Now come to the next point, Moon's current account. Okay. At first I want to discuss the main parts of this question. Dear students, never get nervous. You have to go ahead and be steady. The question is before you. Sans Siliguri consigned. Now the second part is Moon account, that is consignee's account. In this question, students are advised to open a consignment account in the books of consignor, at the same time consignee's account in the books of consignor. Therefore, Moon is a consignee here and we have to open Moon's account in the books of consignor. Therefore, I have to see where is Moon. Here, Moon account in case of consignee's expenses 1,680. Therefore, it will come on the opposite side. By consignment account expenses 1,680. At the same time, in case of commission, to Moon account was rupees 5,334. Naturally, I have to put it on the opposite side. By consignment account 5,334. And now on the credit side, under consignment account, by Moon account, that is sale proceeds, was 71,111. Naturally, it will come on debit side under Moon account. To consignment account, sale proceeds 71,111. And total was 71,111, and naturally we get the balancing figure rupees 64,097, and it is by bank account final remittance, that is balancing figure. Okay. Now the question is totally solved. Therefore, from this question we got one idea that how to do any question relating to consignment at invoice price. Number one. Number two, other factors relating to commission, and when units are not given, only amount is given, how to do. Okay. Thank you, students. Thank you, my friends. If you have any inquiry, please put on the comment box, and please subscribe so that I may make many more questions for you. Okay, thank you.